for International Affairs at Bloomberg News, who joins us now on the phone from London. As Carol mentioned, Mark's story is in the upcoming issue of Bloomberg Businessweek magazine. It is the cover story. Joel Weber is editor at Bloomberg Businessweek. He's with us now in the Bloomberg Interactive Brokers studio. So, Joel, I pose the question to you because it's something that we've been talking about even before the actual invasion, Russia's invasion of Ukraine. What is Putin's endgame?
Well, it started as one thing, and I think as the invasion probably is not going quite as he had hoped or even planned, I think that has the potential to change, and probably has more potential to change from here. But when Mark and I first started talking about this article, it was a little bit of a mind meld, because I went someplace that he was like, wait, I got this all right, I'm going to write it. And he said, all we got to do is look at Putin's history. So, Mark, walk us through a little bit of that, because that, if we spin that forward, it might tell us what the end game in Ukraine becomes.
Yes. So, essentially, Putin wanted control of Ukraine, and so that involves putting someone in charge. And so his initial strategy was to move in very quickly, light-footed, send special forces into the centers of Kiev and other cities, take out the government, replace them with something more friendly, and then he would be able to have them fulfill whatever needs he had. But none of that happened, of course. And so he's now in a much more traditional way of trying to subdue populations, which he's done before. He did it in Chechnya in 1994, again, or rather Russia did in 1994, and then he, 1999 to 2000. And again, in Syria, he's done something similar. Russia has done something, somewhat similar in Georgia. But what they kind of had in common was that he was able to crush these places, reduce, the Russians reduced Grozny to rubble, and Aleppo to rubble, and Homs to rubble, all these places. And he was able in Syria to maintain someone in power who, was the guy he wanted. And in Chechnya, he was able to put someone in power. But the situations are so different. Ukraine is so much bigger that I think it's very clear he can't do that here. So what he has to do is just keep crushing resistance until President Zelensky gives him what he wants. And that you can see that starting to sort of shape up now. They're still a long way apart, but you can see how this is working. And of course, with every day, more of the country will get destroyed.
Right. It is hard, Mark, to figure out how at this stage of the game, how does President Putin, create a neighbor that is friendly and pro-Russia? It's hard to see that.
It's absolutely not happening. So that, that plan A has completely failed. And it is a disaster for him, frankly. It's a strategic disaster already. But he will hope to come out of it with something, and you can see it in his spokesman Dmitry Peskov a couple of days ago said, we could stop this immediately, and instead of saying, as Putin had done before, once we denazified the country, which basically meant regime change, and once we demilitarized it, which means the army being obliterated basically and disarmed. And there would be no Ukrainian army. So he's instead of using those words, he said, we need NATO neutrality, we need recognition of Crimea as Russian, we need recognition of the Donbass, these separatist territories that they've been fighting over for 8 years, that we need recognition of those as independent states. That's not something that President Zelensky can do, but he's now said, we can talk about NATO neutrality, but there's still a long way to go.
Well, how long of a way to go, Mark? Because, we look at the images, we hear our reporters, we see what's happening. More than 2 million people have fled Ukraine since the start of the crisis. That's according to the UN. What's a realistic way for us to try to understand how this continues?
Well,
if
I'm afraid
Putin's...
I'm going to be very
go ahead.
pessimistic, which I desperately hope that I'm wrong. But what I cannot see a situation in which Zelensky can sell the recognition of any of these territories. He said that he's willing to negotiate about their status, and you can imagine, going back to the kinds of talks that they've had before about how much autonomy and on what terms should the Donbas territories have autonomy. And you could, finesse something on Crimea and so on, but Putin needs something more than that. He needs, he needs a win. He started a huge war here, the largest since World War II in Europe, and he needs more than just, a statement from the Ukrainians that they won't join NATO. And, you have to remember that, in the weeks before this started, Zelensky again already said that he was willing to talk about NATO. And you have to remember, too, that before any of this started in 2014, before the annexation of Crimea, Ukraine had it written into law that it was a neutral country.
Yeah.
Well, you give us a perspective that makes us really understand more greatly about what's going on here and what might be Putin's endgame there. Mark Champion, thank you so much. Senior reporter for international affairs at Bloomberg News. It's the cover story of Business Week. And, of course, our thanks to Joel Weber, editor of the magazine.
March is Women's History Month, and every day this month we're celebrating significant moments in women's history. Now with your installment for Wednesday, March 9th, here's Bloomberg's Renita Young.
On this day in women's history in 1959, Ruth Handler, a co-founder of Mattel, introduces Barbie to the world. She brought it to crowds at the American International Toy Fair in New York. The inspiration for the doll began when Handler was traveling in Europe and her 15-year-old daughter, Barbara, spotted a German Lily doll. But as the years went on, Barbie would be mocked as outdated and sexist and criticized for promoting a largely white, gendered image of beauty with an unrealistic body image. But in 1980, Mattel started to become more inclusive when it introduced the first black Barbie. And today, Barbie's dolls come in more than 20 skin tones, close to 100 hair colors, a dozen eye colors, and 5 body types. Those changes served Barbie well because in 2020, Barbie generated its best sales growth in 2 decades. Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today in women's history. This is Bloomberg Radio. This is Bloomberg.
Welcome to The Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa and Tim Stenovic, as we welcome cross-platform TV, radio, YouTube to an extraordinary day of volatility, whether you're looking at oil on the one side to the downside, and if you're looking at stocks to the very much upside, Carol.
It's unbelievable, right? A lot of volatility, but also risk on in a big way, and that includes Chinese stocks that trade here in the United States. There was volatility overnight. The Norwegian sovereign wealth fund snubbing a Chinese company. They're concerned about oil exposure and whether that's going to change activity by the Chinese central bank and impact that economy. Well, not here in the U.S., because that Golden Dragon Index up about 6.5%, Tim.
Well, not just U.S. equities that are higher or equities based in China, ADRs, but also Bitcoin. I had to go there because there's some actual fundamental news as to why Bitcoin is moving higher. That executive order that we got from the Biden administration about cryptocurrency, more research, policy recommendations, not really an immediate impact, but still, crypto watchers say validation of the space.
Jeremy Allaire, we're going to be speaking to a little bit later, Circle co-founder, to talk all the more about the impacts there and also how crypto has been playing within, of course, this geopolitical risk. A day where we see a bounce in stocks after, well, maybe a dialing down of that risk. Many feeling coming from the Ukraine, the discussion of open to diplomacy. S&P 500 trades 2.6% higher, 108 points on the upside. Dow Jones 670 points higher, 2% up. NASDAQ 3.5% higher, but actually only the biggest move since February. And Russell 2000 also up 2.7%, Taylor.
And could this be? Yields are rising, inflationary expectations still continue to climb. Maybe so. You certainly see that when you take a look at, well, where we are on a sector basis. You're seeing technology, one of the key outperformers. You haven't seen that in a while. Energy actually at the bottom of the screen today. You're off about 3.5%. And utilities as well, the two sectors in the green. Remain, all we have to say here is this is pretty much the reverse of what we've been seeing in the last few weeks, and certainly the opposite of the trends year to date.
Yeah, opposite of the trends year to date. It is one day here. Even you take a look at some of the individual movers. Apple, which had been on a 4-day decline, snapping that today up 3%. Yay, right? Well, it's still down 8.5% from the start of the year here, still down about 10% from that all-time high. FedEx has actually fared a little bit better. Those shares higher by about 6% today. Remember, they rallied a little bit yesterday and have managed to kind of buck the trend of the broader market to a certain degree, though they have gotten caught up in that. And travel stocks, which have absolutely taken a beating, down 30-40% pretty much across the board, getting a little bit of their mojo back yesterday and today, booking holdings up about 8%, and of course keeping an eye again on some of those oil and gas stocks, which had enjoyed a 9-day rally that had added about 20% in valuations to a lot of those names. Chevron pulling back just a bit today, down about 2.8%.
Tell you what also got its mojo back, Europe. DAX, almost 8% higher, biggest move since March 2020 in Germany. The FTSE MIB up almost 7% in Italy. We see the stocks, Europe 600, basically climbing to the tune of 5%. This is, we just had scoop after scoop coming from our Bloomberg TV colleagues over in Europe. Maria Tadeo really having that conversation with a key official in Ukraine, talking about the want for diplomacy at this moment. And then, of course, the rally in oil that faded and the money being pulled out as we think about perhaps more production.
All right, so a lot of optimism in the markets, or at least a risk-on trade. And then you've got the billionaires, kind of a bit of a bummer coming out here. I feel like there's a duo. You have Jeff Gundlach warning that U.S. inflation may hit 10%. He's not keen on the U.S. economy. And Larry Fink, of course.
Gundlach's not keen on the U.S.
Is he, Emma?
Okay, fair. Okay, but let's talk about Larry Fink, who has been keen, I guess, at certain different points on the economy. He's the CEO of BlackRock, right? The huge money manager. He said inflation will be higher than we expected. Central banks may not have all the tools in their monetary policy toolkit to address some of these structural challenges. He said this on a call with several thousand global clients yesterday. I mean, the point is we know inflation continuing to surprise us. That's worrisome. We're going to get that CPI print tomorrow, Tim. But I am a little nervous when the Fed can't control this, like what happens?
Yeah, I wouldn't want to be in Fed Chair Jay Powell's seat or, advising him right now, because I got to tell you, I have no idea what to do. 7.9% is that number we're expected to see when we get that CPI figure tomorrow. When's it going to peak, guys? Is this month the peak, or does it keep going higher?
I'm certainly not hearing this month is the peak. I was reading, I think, was it Gundlach, saying that you could definitely get a 9 handle in the next few months, particularly as we see at least headline inflation continuing to rise given these oil prices.
Yeah, and I mean, look, I mean, if anyone knew if this was going to be the peak, I think we'd all be a lot richer. I am curious, though. I mean, we keep talking about the peak, but people don't seem to talk about what's sort of the baseline post-peak, you know? Are we going back down to 2%? No, I don't think most people agree to that. I guess if you look at break-evens, maybe we're somewhere around the 3% range. But there are a lot of people that say, Tim, Carol, we could end up, I don't know, at 5% here for quite some time.
Meanwhile, we look to how the ECB stomachs this as soon as tomorrow we hear and understand the pressure, whether it be transitory, whether it be the gas prices that Europe confronts right here, right now, but how much they can look through it or how much they do have to start hiking rates to be able to bring down that price pressure.
It was interesting. We fold in some of the price pressure and what it means for the equity markets as well. We got two really interesting calls from the street this morning. Citigroup was one of them. Now looking at 200 basis points of rate hikes for the Fed this year. Yeah. That's up from 150. Credit Suisse, though, was saying that if oil hasn't peaked yet, then that really could start to impact and maybe lower equities. So you are seeing some of those inflationary pressures come back into what it means for a discount rate on these equities.
Yeah, and you know, just to go back to the ructions that we've seen in the commodity space, you run GLCO on your Bloomberg terminal, pretty much everything's in the red, from metals, of course, to soft commodities, and of course that big plunge that we're seeing now in the energy space. We're hearing from the Energy Secretary, Jennifer Granholm, speaking at CERAWeek down in Houston. She keeps talking about the potential for greater output by the U.S., saying U.S. oil stockpile release could happen again, may have to happen again. She says that they're looking across the world to see who can boost supply. And she says she expects a 30% increase in LNG supply out of the U.S. this year. So there seems to be, at least rhetorically, some hope out there by this administration that there is some sort of untapped well of supply that can sort of maybe
I love these reserve releases.
Inflationary.
Isn't that like a day of oil, like a day and a half of oil?
Wasn't that what Stork was telling us? Yeah, exactly.
Well, did you see gas prices? They went down like 3 cents.
It's not just about supply. It's also about refining capability and making sure that the oil that's extracted from the ground here in the United States can actually be refined here in the United States.
Look on your Bloomberg
that's why
terminal
that's
and see
why
where
we're
refining
oil.
capacity is right now.
Climate change.
Nationwide.
Can I just make climate change? Climate
Is that
impact?
still happening?
Well, I mean, we've got goals being laid out by companies, by governments. I mean, how can we continue to aggressively move into fossil fuels if we don't think about alternative energy, which will take time? We know it, but we definitely feel like we're hearing more conversations.
Well, there's a short-term issue that
Right.
these governments have to deal with, and then of course the longer-term impact of climate change, which may not be as longer-term as they want it to be.
Yeah, exactly. All right, we're going to talk more. We will be back in less than an hour's time. Our cross-platform coverage will continue on radio, TV, and YouTube. We call it Beyond the Bell. We'll be back to count you to the close on this Wednesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's such a tricky time. Like, I do think about this, like, you know, what the Energy Secretary, Jennifer Granholm, said, that, you know, ready to work with the energy industry and, you know, strengthens my resolve on an energy transition. I mean, you've got this giant fossil fuel industry. How do you make that pivot without decimating them? We know, we just did that story on the Bloomberg Big Take. Like, all of this transition is going to take time. We get it. But I mean, if you all of a sudden start to put your efforts toward it, which climate activists would say, yeah, we're already late. I'm curious about how this transition works.
I am too, because if you're an executive at one of these oil companies right now and you're seeing higher cash flows as a result of higher prices, what are you going to do with that money? Are you going to make investments in oil extraction and refining in the U.S. if you don't have the support of the government?
Right, which will help on the top and bottom line right now, which will help in easing supplies.
To do that.
Well, that's true. But I mean, there are some places where you just have to kind of, the work, the infrastructure has been done, right? And you just kind of put on the pumps. None of it happens overnight. I mean, I don't know. I'm curious about this. We are seeing, though, those big integrated oil companies increasingly make investments, though, in the alt energy world.
Yeah, whether it's, you know, and we can talk about carbon capture technologies and to what extent those are actually real when it comes to reducing, when it comes to actually helping the environment, but also making that transition to, cleaner ways to power things.
The U.S. expects 30% increase in LNG supply by the end of the year. They're also, by the way, the Department of Energy hiring 1,000 people at all levels. Right, so we'll see that playing out certainly when it comes to those jobs numbers. All right, you're listening to Bloomberg Business Week. Carol Masser, Tim Stenovic.
Let's head to Washington, D.C. for a check of the latest world and national news. Standing by is Nancy Lyons. Hey, Nance.
Hey, Tim. Ukraine's President Volodymyr Zelensky is repeating he is willing to consider some compromises to end the fighting in Ukraine, a stance that he's held since the war broke out. But he says the other side must also make compromises. His deputy chief of staff spoke exclusively with Bloomberg earlier today and says Zelensky is even willing to meet face-to-face with Russian President Vladimir Putin.
It will, under no circumstances, be on the Putin rules or being under Putin ultimatums. Our first and foremost precondition for having such kind of negotiations is the immediate ceasefire and starting with the withdrawal of Russian troops from the territory of Ukraine.
Ihor Jakova tells Bloomberg while Ukraine is willing to talk, it is not willing to cede any of its territory. A grand jury in Colorado has indicted a county election clerk who had sowed doubt about the 2020 presidential election. The indictment alleges she was part of a deceptive scheme to breach voting system technology. Tina Peters is a Republican and was charged with 10 counts. Most of the nation will be springing to daylight saving time this weekend, but there are some who want to eliminate the back and forth. Steve Calandrio is a professor at the University of Washington School of Law who has been studying the effects of the time changes for years. He testified before Congress today and says he favors staying on daylight saving time. He says it provides more daylight in the afternoons, which is safer.
Darkness kills, sunshine saves. That's what I like to say to my students. And darkness is twice as deadly in the evening hours as it is in the early morning hours before sunrise.
Calandrillo says daylight saving time also saves energy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. newsroom. So Tim and I were part of an event. It was all about a Bloomberg Live event. What was cool, it was in person as well as virtual, but it was great to be out and about at a conference,
This
essentially.
was my first live Bloomberg Live event. I mean, we went to the Power Players Summit, but I wasn't moderating an event there. We were broadcasting. You moderated many events there, but we were broadcasting live from there, which was awesome. For the last, 18 months I've been here, I've been doing these virtual events. The Bloomberg Live events are amazing.
Yeah, they're a lot of fun. It brings together people, and the whole thing is about having a conversation and on stage, off stage. And so you're going to hear some of those conversations in just a moment. In the meantime, that was about work and how work is shifting and hybrid, and what does it mean as we all get back to the office, and especially when not everybody is going back to the office. Well, in keeping with that, our Ariana Cohen has a story about Microsoft.
Yeah, the company's begun calling employees back to its headquarters in recent weeks, but Carol, as you and I talked a lot about today, its return to office strategy hinges on hybrid work. So from Wall Street to Silicon Valley, companies are navigating the messy transition to the workplace after a 2-year hiatus during the pandemic. Microsoft has this unique perspective because it sells its own remote collaboration tools. They compete with Zoom and Cisco. Even as workers trickle back to their desks, the company's leaders are focused on those employees who aren't working in the office.
Jared Spataro, who was at our event today, and he's also been on our air. It's counterintuitive. He's the corporate vice president for modern work at Microsoft. He said in an interview, you have to design your physical space for people who aren't there. And that, I talked to a senior executive at Cisco. You'll hear some of that conversation. They are rethinking their office space as a result.
So what does that office space look like? And how do you actually use it to get people into the office on the same days versus when they're, certain teams are in there on the same days? Or does that even matter based on new designs?
Right, maybe not. And I
you
think
can do these video conferences in a way that makes people actually feel included.
Fran Kasudas from Cisco, they are shifting more of their space to collaborative workspace so that when people do come to the office, what they want to do is have FaceTime and work together in groups. So you're going to hear more of her conversation and more from our work shifting event right here on Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. equity markets surge. Oil is dropping. Lots of big stories today as we head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are surging, helped by that plunge in oil. Dow's currently up 751 points. S&P's gain 121. NASDAQ is higher by 483. The U.S. 10-year yield at 1.94%. Gold is down 62 points. WTI crude futures down 12%, but Bitcoin is higher by 10%. Among the main 11 S&P sectors, only energy was in the red, and leaders to the upside in the Dow, Salesforce, American Express, and Nike, while Chevron fell 3% and led to the downside. After earnings, Bumble soared as much as 49%, and in other news, AT&T Discovery to sell $30 billion of bonds amid soaring demand, and the Frontier CEO said that customer demand is the strongest since 2019. Wrapping things up, CrowdStrike reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Here live, breaking news over your Bloomberg type squawk-cast, QUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Earlier today, Bloomberg Live hosting a work-shifting event all about what our work life is post-pandemic as it gets back to quote-unquote normal. Tim and I participated in the event, and we had several discussions. Among them was one with Fran Kasuda. She's Executive VP, Chief People Policy and Purpose Officer at Cisco. We began, though, with her team in Europe in light of the Ukraine war.
You guys have operations in Russia, Ukraine. How's everything going?
It's really hard. About 4 weeks ago, we started to offer our employees in Ukraine the ability to relocate out of the country, and had a small number of our employees take us up on that. We have about 70 employees in Ukraine. In the last week and a half, we've had about 30 families opt to leave, and so we're helping them get to Poland. From a Russia perspective, our employees are struggling too. And so we have a much bigger operation there. And we have put our employees on a paid leave, given the U.S. sanctions. And we're doing our best just to, of course, adhere to the sanctions and take care of our people. But it's heavy and it's hard.
Is it changing strategy rethink and what this year looks like? I mean, we are at this point where our in-house strategists are saying that the longer this goes on, we've got to rethink what the second half of this year looks like.
It's significant. I will tell you, it's another really challenging example of a huge event putting the focus on people and then putting the focus on business and what needs to evolve. And so it's something that we're staying close to. We're trying our best to remain hopeful in an environment where there's not a lot of that right now.
Yeah, it does feel like it's a reminder of the last couple of years, just things are coming at us from so many different angles. All right, so the American workforce, the Cisco workforce in general, if we can take a step back prior to kind of the latest, I don't want to call it a black swan event, but stress on our system. How are they doing?
So I would say they're doing well, and I saw some of the poll numbers that you just shared.
Do you agree with them?
I agree with most. I felt like the productivity number was a little bit lower. So we have felt like we didn't see a productivity dip whatsoever. We are trying really hard to get that well-being perception up. And so what I would say is that our people have found a new way to work. And the market right now for talent, as you all know, it's so incredibly hot that I think people are asking the question right now, is it worth it? Where do I want to be? And so I think you have this moment where companies are trying to be their best for their people, and their people are really thinking about what's next.
Well, and it's interesting. You guys go out and survey quarterly.
We do.
Your workforce. How has it changed through the life of the pandemic, and what of the results do you think stick with us longer term? Because I think we're trying to find out, is the normal with us for a little while, memories are short, we go back to the way it was, or does it stay with us?
Okay, so it's really interesting. So I'll tell you about the elements that have changed the most over the last 2 years. So the first is around well-being.
Yeah.
So about 2 years ago, what we could see was that women and our people leaders had lower well-being than our individual contributors. And what we basically said at that moment was, our people are caregivers in every aspect of their life. You're caring for your teams, you're caring for loved ones. And so we started to reconcile that and put programs around how to help it. Recently, what we saw is that men's well-being has also dropped. So women have held, men have met them there. And so we just see a lot of our employees struggling with well-being. And so that's one thing that we've seen.
Does that stay with us? I feel like we are all very sensitive, very aware. We're asking about everybody. Managers are asking. They seem to care. Does it stay?
I think it does stay. I do. I think you're also going to see companies get more and more creative around how they address well-being and some of the root cause issues, not just how do I help you at work with this issue, like how do I help you where you are at the moment? That's how we're looking at it from a Cisco perspective. And so I can see that shift, which makes me optimistic that well-being will be a conversation for us into the future. I think the other thing that the engagement poll surveys show is that when leaders are checking in with their people, when our people feel attention, that really impacts retention for the company, connection to the executives, and to the overall strategy of the company. And so there's some basic things that our surveys tell us there as well that we'll continue to lean into.
The relationship with management,
yes.
employees.
Yes.
There's probably been a lot written about it, but we really understand that it does make a difference in terms of retention and connection for workers, especially at a time when it's such a tight labor force that a lot of workers can go. They have a lot of choices.
That's right. That's right. I think what we see is that at Cisco, the data shows us that when a leader says, hey, how is it going? What can we be doing better? You have 21 times higher likelihood of holding on to that talent. And so just the curiosity and the interest in what can be better is so huge.
And that was Fran Kasudas, Chief People Policy and Purpose Officer over at Cisco. She's Executive VP. You can see more of that interview at BloombergLive.com. She mentioned a poll, and I had put up a Twitter poll from our Bloomberg Live audience, and it asked, has your productivity suffered in the work-from-home environment? 63% said no, and about 37% said yes.
Okay, you also did some interactivity with the audience. I was there today, Carol.
Yeah.
You asked people to raise their hands when you asked a certain question. What was the response that you got from the audience?
Which one was it?
It was in terms of productivity at home.
I think people were feeling like they were pretty productive.
Yeah, I think so too.
And they liked working in their kitchens, to be quite honest with you. I think, that is something we have seen a lot about. I remember talking to Chuck Robbins, the CEO of Cisco, who was surprised at the amount of innovation that was able to be done. And that was something he was initially worried about. We're going to hear more. You have an interesting conversation coming up with Rob Falzon, so we'll get to that. That was also at Work Shifting. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well,
what, are you just hanging out on Bumble? What do you?
oh
what's
yeah,
that?
that's totally
Yeah.
me. After like years and years and years of marriage, I'm on Bumble. That's a no. What is happening? Yes, big time. Investors big on shares of Bumble.
Yeah, shares are higher by close to 40%. But, you got to take a look at the longer-term chart, and we're going to do that in just a few minutes with Matt Martino, technology analyst at Bloomberg Intelligence. First, though, we are less than a half hour away from the close of trading today. Let's get an update on the markets from Charlie Pellet.
Hey, thank you very much. Bumble shares, they are surging right now, up by 40%. In the meantime, I'm on Bumble, Fumble, Mumble, Stumble, Grumble. I've got them all. We've got the S&P up 124 right now, higher by 3%. The Dow's advancing 791, up by 2.4%. NASDAQ up 495, gain there of 3.9%. 10-year yield 1.93%. We've got spot gold down 2.8%, 1993 the ounce, back below 2,000. Crude oil, what a story there. We have seen big moves up and down now, all for the past several days. Big moves to the upside on WTI. West Texas Intermediate crude selling off now by 11.3%, 13.97 on WTI at 109.75. Brent down 12.4%, down $15 the barrel to 112.16. Global stocks, they are staging a ferocious rebound today. 27 minutes to go ahead of the close. We've got the Dow very close to session highs. 804, up 807 points right now, up 2.5%. Fast-moving markets, indeed, high of the day right now. S&P up 127, up by 3%. NASDAQ up by 3.9%. So a big rally underway on Wall Street. Some of the other stories that we're following: Papa John's International suspending all operations in Russia. Shares of the pizza company up now by 4.7%. Imperial Brands has become the first major cigarette maker to halt operations in Russia. The company makes Kool and Gauloises cigarettes. Its shares right now, the ADR is up by 3.5%. Philip Morris International also scaling down operations in Russia. That company's cigarette maker up by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
The debates that go on when we're not on air. We're just taking a look at some Bloomberg functions, because one stock that really stood out for us is Bumble today. Stock's up as much as almost 50% today at its highs, still up by about 40%. We talked about this after the close yesterday. You did, big time.
Yeah, it sounds like it's a lot. And well, look, that certainly is, but you have to remember where it's coming from. It's the highest now since March 1st of 2022. So it's the highest in about a week, even with today's increase. That's how beat up the stock has been.
A week?
Yeah. Matt Martino is technology analyst at Bloomberg Intelligence. He's with us now in the Bloomberg Interactive Broker Studio. Matt, this story, we've been talking about Bumble a lot in recent days because of the exposure that it has to Russia, not just from the perspective of Baidu, the app that it owns, with exposure in Belarus, Ukraine, and Russia, but also with engineers. What did we learn from earnings yesterday in terms of how exposed they are?
Yeah, sure. So I think your point on the stock price, shooting up today, certainly really is reflective of kind of the better than feared guide that Bumble put out yesterday post close. Bumble got it to about 23% sales growth for fiscal 2022. And this was a lot better than investors were expecting. And if you look back just a week ago, as you guys say, the stock ahead of consensus, and that's why investors are getting excited about the stock today.
Is it a good business?
Yeah, so look, I think online dating as a business is relatively strong. You know, Bumble has about 27% EBITDA margins. Match has about 40%, which is really best in class across the internet sector. So from a unit economics perspective, dating apps are a strong fundamental business. I think the challenge with Bumble over the last couple of months, really since it IPO'd, has been the valuation, right? It was trading as high as 15 times sales at one point. I think that, you know, the huge sell-off we've seen relative to interest rates in Ukraine and Russia has really challenged this name over the last 6 to 8 months. And so I think going forward, you know, they've really kind of reset expectations by delivering an above consensus or at least meeting consensus guide. So, you know, I think investors are at a better starting point here, and, you know, people will be able to evaluate Bumble on better footing.
Hey, Matt, what do Bumble's earnings tell us about the way that other dating apps are doing? Because we did see moves in sympathy.
Yeah, sure. So, you know, Match is certainly up, you know, 9-10% today. You know, I think Match put out a pretty subdued and conservative guide, you know, on their earnings, you know, about 15% growth. Consensus was looking for 22% growth. And again, that's partially the strengthening dollar, but Match has really high Asia Pacific exposure, about 20 to 25% of revenue. And, you know, you'll recall that Omicron, you know, that really hit Asia Pacific after the US and Europe. And so we're still seeing some of those economic challenges, that lower propensity to pay with daters in the Asia Pacific region. And that's reflected in Match's lower guide. But I think, you know, Bumble's earnings certainly, you know, gave a bit of a sympathy trade to Match because, you know, clearly, you know, there are a lot of daters that are interested in getting back in person, dating, going on these apps, engaging with the products. And I think that's what we're starting to see.
Yeah, and BMO Capital Markets did an upgrade on both Match and Bumble today. When you look at the balance sheet of Bumble, where do your eyes go first?
Sure. So I think the cash position and the debt, you know, I think they came in with a significant debt load, but I would go back to the margin profile of this business at about 27% EBITDA margins. They're free cash flow generative. So I don't see that as a huge overhang on the stock. I think really what it was a lot about valuation and then the durability of top line growth. And I think that they quelled a lot of investor concerns about the durability of that growth profile over the next couple of years, you know, by posting that consensus guide, you know, yesterday afternoon.
Yeah, and until the metaverse comes along, that's how we're going to date, right? It's all about apps. I don't know. I've been married for a long time. I'm just saying.
No, look, I think the metaverse is an interesting angle. Yeah, you know.
No, but you know what I'm saying? Like, that's how people do it, right?
Yeah, no, absolutely. Look, I think today you're seeing that most of relationships, you know, start online in some capacity. And so I think it's certainly an angle, whether it's social media or the dating apps.
Well, let's not get into the other capacities. All right, we're going to leave it there. Matt Martino, thank you so much. Tech analyst at Bloomberg Intelligence.
Let's head to Washington, D.C. for an update on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Ukraine's President Volodymyr Zelensky says he is willing to discuss the war with Russia, but both sides must compromise. President Zelensky's Deputy Chief of Staff, Ihor Jakova, tells Bloomberg any negotiated peace will require direct talks between the two leaders.
We are ready to talk over a large spectrum of topics, but unfortunately, for the time being, we do not see that kind of readiness from President Putin himself.
Ihor Jakova says Ukraine is even open to discussing Russia's demand of neutrality as long as it gets security guarantees from the U.S. and Europe. U.S. governors from California to New York are proposing tax cuts, rebates, and other forms of relief to drivers paying more than $4 a gallon to fill their gas tanks amid Russia's war with Ukraine. New York Governor Kathy Hochul is considering relaxing the state's levy on gas sales, while California's Gavin Newsom has proposed a tax rebate. Well, the first person to receive a heart transplant from a pig has died. Bloomberg's Nathan Hager has more from Washington.
The University of Maryland Medical System announced 57-year-old David Bennett's death. It says he died yesterday, 2 months after the groundbreaking experiment was performed there. Doctors have sought for decades to use animal organs for life-saving transplants. Bennett was a candidate only because he was dying and not eligible for a human heart. The Maryland surgeons used a heart from a gene-edited pig to try to prevent organ rejection. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, Tim Stanovic. Claire Ballantyne has a story that's among our most read on the Bloomberg. I'm just going to read it because it's just so well done. It was International Women's Day yesterday. Companies from Spotify to Instacart to Hershey's were highlighting their initiatives toward gender diversity. Gwyneth Paltrow was posting an Instagram about her daughter, and a Twitter bot in the UK was going viral for highlighting gender pay gaps.
Well, then came the tweet from Bain Capital Ventures executive Stephen Cohen about how he was, quote, privileged to introduce the, quote, special team behind the firm's new $560 million crypto fund. You know where this is going, Carol. 7 people, all men.
Well, needless to say, the backlash was very swift. By the evening, the original tweet had been deleted, and Cohen issued an apology.
He wrote, quote, the mess up we had today is one of many, many reasons why it's critical to have a diverse team to provide much-needed perspective. We are sorry. Quote, we're committed to hiring women, investing in women-led projects, and being a driving force in the industry for sponsoring the creativity and genius of women, non-binary people, and people of color. More to come.
We've had conversations. I mean, women in the U.S. earn on average 83% of what men make, and much of the gender pay gap is due to their underrepresentation in the highest paying jobs and fields. This is why when we talked to Katika Roy, like Pipeline, that's her company. It's about creating a pipeline. I talked with folks today here at our Work Shifting event, and we talked about mentorship versus sponsorship. Sponsorship is something where you are working with someone to help them on their career trajectory to aspire to more responsibilities, more pay, everything that comes with it, and that's significant. And women aren't necessarily seeing that as much.
But it's also the venture capital side of things, Carol. And we've written a lot and spoken a lot, and Business Week and Bloomberg News has covered a lot the way that it's difficult for, for women and for people of color to actually raise money from venture capitalists.
Yeah.
And how it's very underrepresented there as well.
Even female venture capitalists not necessarily giving money to other female entrepreneurs. So it's showing we still have a long way to go when it comes to corporate America and gender equality in the workplace. Companies are trying to do the things, but yet you still have these types of situations. You're listening to Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Dip buyers are powering the S&P 500 index higher now by almost 3%. We've got the S&P up 119, up by 2.9%. A ferocious rebound for the U.S. equity market from the war-induced rout. S&P, as I mentioned, up by 2.9%. The Dow up by 768, close to session highs with 13 minutes to go, up now by 2.4%. Nasdaq up 486. That is a gain of 3.8%. Still, today's rally, though, managing to claw back only some of the losses incurred since Russia invaded Ukraine. 10 years down 23 seconds. 10-year yield now 1.92%. Spot gold back below 2,000 at $19.91 the ounce, lower by 2.9%. West Texas Intermediate crude, major story today, dropping by 11.4% after big gains in recent sessions, down $14 a barrel now, back below 110, 109.65 on WTI. Barrel of Brent, the global benchmark, down 12%, 112.55 a barrel. After the bell, among some of the names reporting will be CrowdStrike Holdings. CrowdStrike up now by 8.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
President Biden's announcement that the U.S. will ban imports of Russian fossil fuels significantly escalates the response to Vladimir Putin's unprovoked war on Ukraine. Acting by itself, though, the U.S. can only do so much. That's because, unlike many of its European allies, the U.S. doesn't buy much energy from Russia. The U.K. has promised to follow America's lead in banning imports of Russia's oil, but it will continue to buy its gas and coal. Meanwhile, Europe's other governments are looking at ways to cut their own imports. Wherever possible, these plans should be accelerated. For many U.S. allies, banning Russian fossil fuel imports would be impossibly disruptive. But planning to reduce and then eliminate their dependence on Russian energy is entirely feasible. A credible commitment to do so would set Putin back as little else would. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10 and a half minutes left in today's trading session. We are driving to the close, and we're just off our best levels of the session, but yeah, risk-on trade today here, Tim.
Yeah, it certainly is. David Dietz is managing principal and senior portfolio strategist at PPAC Private Wealth Management. He's got $11.1 billion in assets under management. He joins us on the phone once again from Summit, New Jersey. David, how are you?
Tim, I'm doing well. How are you?
Doing well, thanks. So how should we read into a rally like today when, given what we've seen over the last 4 days, low after, decline after decline for the S&P 500 and a one-year low on the S&P 500 yesterday? How should we read into it?
Well, it's nice to finally see some volatility on the green side of things.
Okay.
Of course, that VIX is still way above 30, so volatility is with us. I think it's three things today, Tim. As you pointed out, we were way oversold. That S&P 500 was down about 5% in just 4 days. Certainly, I think people are, looking closely at the potential for some talks between Ukraine and Russia that should happen in Turkey, and the fact that the Ukraine is talking about not insisting on the possibility of NATO membership may be enough to kind of thaw the situation. We'll see. I think people are skeptical, but that's helpful. And of course, we're seeing these haven assets pull back dramatically. Of course, it's the worst day for oil in a long time, down close to 12%. But the dollar's under pressure. People are rotating out of U.S. government bonds, and gold is now back below 2,000. So with those haven assets under pressure, people felt more confidence to get back into the stocks.
All right, but it doesn't sound like it's necessarily an all-in indicator.
It's way too soon to make that kind of prediction. Of course, we're just seeing some awful scenes of more bombing of civilians and so forth in Ukraine. So we're not quite sure what the end game is for Putin. And history shows that when a Russian leader does not do well with military adventurism, it does not work out well for him. So what his end game will be, what his double down position might be, is anyone's guess. So you certainly have to stay diversified and cautious.
Well, and that's something we just talked about, really the cover story of Bloomberg Businessweek magazine, that maybe the end game is just because he thought this was going to be so easy to do, it's obviously turning out to not be that way, that maybe it is reducing Ukraine to rubble. And that certainly plays into what we've seen with President Putin in the past. In the meantime, David, what does it take for the financial markets, global financial markets, and maybe we can't lop them all together, but what does it take for it to calm down? And I think about this particularly in terms of U.S. equities, how tied they are to the global trade, or how much more tied they are to what we get from the Fed next week.
So it's a great question. We're certainly going to be, all eyes are going to be on the consumer price index information tomorrow. I think anything.
But we know it's going to be hot, right? We know it's going to be hot.
It's going to be hot, but we're going to want to do the deep dive to see what's driving it. To the extent its wages are hotter than we expected, that means it's going to be a longer slog to get rid of the inflation. To the extent it's just the headline numbers, food and energy, we're going to have a little bit of hope here, because we know that if there could be some resolution at some point, and history tells us eventually there will be, if there's some resolution to Russia and Ukraine, perhaps that takes some of the steam out of the energy market, takes some of the steam out of the other commodities, including wheat, copper, nickel, and so forth.
Right.
And that would give us some hope that inflation there may be a little light at the end of the tunnel, and that could keep the Federal Reserve a little less hawkish.
Well, what does that light at the end of the tunnel look like, David? Because we had this conversation with our friends on Bloomberg TV just a little earlier in the day. What is the normalization of inflation when it doesn't, when it is no longer at 7.7%, for example, when it does moderate and go back to something more normal? What's that more normal number?
Yeah, that's anyone's guess here. We do think that the new normal is going to be higher than the sub 2% we saw before going into COVID. I think that really you're looking at what's the balance in terms of this inflation between supply disruption, emanating from COVID, where goods can't get through the ports, and of course now punctuated by the war in Russia and Ukraine, and to the extent that this excessive demand, where there's just too much money in people's pockets because of the checks and other stimulus that was done in COVID. To the extent it's too much demand, then there's a role for the Federal Reserve. They're going to increase interest rates, and that's going to make things tighter, and perhaps that will squeeze the demand inflation out. But to the extent it's supply, and that's longer lasting, again, a lot depends on how long these geopolitical difficulties ensue, then that ultimate rate could be a little bit higher.
Hey, David, GDP Now, the Atlanta Fed forecast, they update it every week. We got a new read on it yesterday. Last week it was unchanged for the quarter. Now it's saying the first quarter we might see an increase of about 0.5%. And it shows stagflation threat. Omicron behind us.
You said it, Carol.
But let's go to stagflation. If we are indeed in a stagflation environment where inflation's a problem but growth is not happening, what does that mean for the equity trade? What historically can we draw upon in terms of what that might mean?
Well, certainly that is a negative. That means that a lot of cyclical stocks that we're going to be benefiting from continued strength in the economy won't do as well, and there could be a rotation to your consumer staples, your utilities. It's going to put pressure on their financials. We came into this year thinking that there'd be a big increase in interest rates.
Big rally in financials today. Yeah.
Yeah, they are. And the question is it just an oversold bounce, or is it something more sustainable? We don't really know, but certainly there's been a nice pullback in financials. I mean, you have a company like J.P. Morgan Blue Chip at a 52-week low. You got to believe that some of those bargain hunters today are looking for a longer-term return to normalcy in the financials. And of course, traditionally, you go back to your 70s playbook. You're looking at commodities. You're looking at energy. If it's truly stagflation, but this is what makes it a very tricky time here.
David, we have 30 seconds left. What are the calls that you're getting from clients right now?
it hasn't been as bad as during COVID. We did get a call from someone who wanted to sell everything because they thought there could be nuclear Armageddon. You can't rule anything out, but she's got a beautiful home at the Jersey Shore. I said you probably take a greater risk driving down there than you have of actually having the nuclear problem, and maybe your portfolio isn't your biggest concern if that's there. But so that fear is out there.
Right.
But obviously we're on full alert, and sometimes when the fears that we're all talking about tend to be priced into things you're not talking about that can come back to bite you.
Yeah, well, listen, but it's amazing that we're even having these conversations and those concerns out there. David Dietz, stay well. He's over at PPAC Private Wealth Management on the phone from Summit, New Jersey. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We are counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Boston, Caroline Hyde, Taylor Riggs. Can you hear me? Counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast partners, Carol Masser, Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. Another volatile day here, Carol.
Yeah.
Obviously, most of that volatility, at least the start of it, was in the oil market.
Yeah, no doubt about it. We've seen some big moves once again. I mean, that seems to be the one thing we can count on. I've been watching the financials. As rates have moved up, we've seen investors move in big time into the KBW Bank Index. That index alone up about 4% here, guys.
Even though we've seen a lot of big moves of late, these moves are pretty outsized. S&P 500 on pace for its best day since June of 2020. Get this, guys, the NASDAQ 100 on pace for its best day since exactly 1 year ago.
Yeah, and there have been the similar moves for this overall NASDAQ as well, so big tech getting a run up. We are seeing a little bit of a rollover in the Dow, as you'll see, just off of its highs, but really this has been a story of commodities, how we are starting to see a plunge in oil, there's no other word for it, and what that has meant overall for a decision to buy into equities right now.
Certainly seeing that risk on trade. I think it was interesting for the radio audience. We just had a really interesting conversation with Nadia Lovell over at UBS saying that you're starting to see spreads widen a little bit. Romaine, you would typically see that when yields are starting to rise, but it is signaling that there might be some concerns about growth up there, but we're nowhere near some of the levels that we've had in, let's say, March of 2020.
Yeah, and I always hate to pour cold water when we have these types of rallies here, but remember, we've kind of been here before over the last few weeks where we've had these big drawdowns and then you get a 1 or 2 day rally here, and then something happens and everyone
You're calling it a dead
goes
cat
back.
bounce.
I'm not. I'm just saying that we should wrap ourselves up
Why
in
do we
caution
call it a dead
like Kim
dog
Kardashian
bounce?
and waddle our way down the catwalk with a little bit more caution here.
Why do you
no cats.
hate on cats?
Oh, Taylor. Taylor's our cat lover here.
Yeah,
on the
I'm on
show
team.
here.
I'm on Team Cat with Taylor. I got to tell you.
No.
I am.
Can't say.
Yeah.
And
sorry,
dog
guys.
bounce.
Taylor Riggs, Team Cat here. Let's take a look at what's going on in the market. Disco ringing the bell here. Dow Jones Industrial Average higher by about 2%. 653 points added to the average on the day. The S&P 500 higher by about 170 points or 2.6%. The Russell is higher by about 2.7%. Let's take a look, though, at the NASDAQ Composite and the NASDAQ 100 here, because these were your outsized gainers here on the day as a lot of those big cap tech stocks got a little bit of their mojo back today. It's going to finish higher by about 3.7% here on the day. Biggest one-day gain officially now going to go in since March of 2021
Romaine,
on the NASDAQ.
did you go to discos in the day?
I'm not that old.
Okay,
But,
just checking.
you know,
All right.
We can have that conversation off air.
We will do that. S&P 500, we talk about the risk trade on, and we're going to get into the sectors in just a moment with Taylor, but we had 421 names in the S&P 500 higher today, 84 lower, Taylor.
Yeah, you certainly see that here on a sector level, Carol. You want to do broad-based, Romaine? We could do broad-based. Take a look at this. The
I
sector,
wish our radio audience could see that.
Well, we'll tweet it out because it actually pretty is stunning. It's a stunning visual. For the radio audience, what we're looking at is the sector winners and the sector losers. It's pretty much all green on the screen except for 2 at the bottom. Let's start with some of the winners. You were talking a lot, Carol, about the financials. That continues to be a big winner today, up 4.4%, as you are seeing yields sort of reflate back up higher. And it is pretty risk on. It's durables, it's semiconductor, it's software and services equipment. Those are all up more than 4%. You go down to the bottom and, well, it's sort of a classic reversal, Carol. Everything that we saw yesterday in the year, that's reversed today. Utilities and energy, the worst performers, are off about 3% or so.
Yeah, we're all going to be asking, oversold bounce, or is it sustainable? And that could be a question for Bumble because, man, that's the top of my gainer list today. It was up as much as almost 50%, right? Yeah.
It's 42% to be exact.
Well, That's at the close, but at its highs, it was up almost 50%. Let's get it right here. All right, but this was the
You
case.
have Match Group on your board too. There's a lot of dating going on. What's
Well, you know,
Are you trying to communicate
BMO
something?
Capital Markets saying let's make it a double date. I mean, they basically upgraded the two stocks, both Bumble and Match. See what I did there? So Match was up 13% as well. So they moved it up to an outperform from a market perform. They're optimistic about the prospects for online data. Go figure. Bumble, though, can I just point out, it is still down 70% from its high back in February of 2021. So a long way to go. Just want to mention Caesars Entertainment. If dating isn't your thing, perhaps gambling is. It was topping the S&P 500, up the most in almost 2 years. Stock was up about 10.5% by the close. Launched mobile sports betting across Illinois. They are now live in 22 states and jurisdictions, 16 of which are mobile.
Dating and gambling.
What? Dating
You
and
can do
gambling.
both, right?
It's a good and heady mix.
Well, you know, when you're risk on, sin works as well.
Well, let's talk about some of the moves lower today. You heard Taylor talk about the energy sector under pressure today with oil prices moving lower. The worst performer in the S&P 500 on a points basis and on a percentage basis today is ExxonMobil. ExxonMobil, it's already up 34% this year, 58% last year, so keep that in mind. Yext, also under pressure today, is finishing the day down by more than 9.2%. The revenue forecast for the first quarter falling short of analyst estimates. The company shuffled its management after those forecasts fell short. Multiple analysts downgraded the stock after the company reported as well. And this is an interesting one, Natera. It's a prenatal testing services company. This short report came out from Hindenburg earlier today. A lot of pressure on the company's stock as a result. I should note, the company did come out and say in response to that report, quote, "We disagree with the accuracy of this report, which was generated in an attempt to make a quick profit by short sellers." It's the same story that short sellers have been pitching for many years.
And we should point out, too, I thought this really caught my eye earlier today, too. And I mean, Hindenburg has an interesting track record. And I remember they, took, of course, that position against Clover, which was made very public. And I guess to a certain extent, I don't know if they were proven right, but it certainly, at least as far as the stock's performance, certainly proved them right.
Meanwhile, I mean, Natera, sort of the testing that many are new, hopeful of building a family, people are dependent on, so an emotive kind of a subject. Meanwhile, I'm looking at what has been an extraordinary move cross-asset. We talk about the rally that we saw in stocks. Talk about the rally that you saw in certain FX pairs. Let's have a look across asset for my radio audience. Euro up 1.6%. Biggest rally we've had since 2020. Now, this is after we've seen the euro under considerable pressure. We've worried about the Eurozone in terms of a growth. We've worried about, of course, the fact that the ECB isn't likely to be hiking rates anytime soon. We've seen, of course, the move by the EU to shore up the economy, to potentially be selling bonds, to be able to spend more on defense. And indeed, we've seen a 16-month, biggest drop in 16 months for the dollar index. We're off by almost more than 0.9% for the dollar index, as we have this myriad of headlines, whether it be hopes that some sort of, dialogue can be brought back again between Russia and Ukraine, diplomacy, call it compromise. Some are going as far to say, look, the headline risk is big for us at the moment, but we look at some sort of hoping there, and we look at what has been a commodities story. Money moving into risk assets as we see Brent off by 12%, WTI crude off by 11%. This is as we traded $110 a barrel. At one point, we were falling more than 17% on Brent. We see heating oil off by 20%, gas oil off by 25%, all as we eye the CPI reading tomorrow, and all as we see the yields rising on the back of all of this. We're currently seeing risk. On means that we sell off out of European debt in particular. What about the U.S., Taylor?
Yeah, so similar of a story here as well, Caroline. It is yield higher pretty much all across the board. And as Romaine had mentioned, it really is looking at the front end of the curve. Now, at 167 on the 2-year yield, we've surpassed where we were a month ago, now looking at the highs that we haven't seen since December of 2019. You go further out on the yield curve, that's not so much the case. We're still at a 194 on the 10-year. Remember, we were well above 2% before the Russia-Ukraine war. So we're not quite there, but yields indeed have been the long-term path is higher.
Yeah, well, and we can get there pretty fast. So, because remember, we got to 206 on an intraday basis. What was it, mid-February? And remember, when we were making those moves were in 8-10 point increments that we saw. So, I mean, we're not that far away from it.
Right.
Meanwhile, we, of course, keep an eye on how the market continues to shift ahead of the all-important data tomorrow. I mentioned it, inflation is where we're going to be tracking our eyes. In response to inflation is where we're going to be taking our eyes as well with the ECB.
Like the price of like bread Have you gone? I mean, like bread, just basics.
Should we debate how cheap much cheaper is in New
I don't want to
Jersey?
talk fuel because I know Carol. You know, she's the big spender here, so it doesn't really affect her. But when you talk about just like basic
Where does that
goods,
come from?
bread, eggs. You know,
Yeah.
my wife was ranting about this the other night.
Well, I mean, look, it makes sense.
lot.
And how much worse is it going to get given, the turmoil in Russia and Ukraine and given that, they provide so much of the world's wheat. So you have to wonder how much prices are going to go up or what's priced in now.
Yeah.
So how does the Fed think about this, right? Like ultimately, the inflation print tomorrow, it's important. It has some of the energy data in it as a result of the invasion into Ukraine and higher energy prices. March is going to be interesting, but we've got to watch to see, Tim, where we are seeing inflation. Is it wages? Where is it? And how much of that is sticky?
David, we just spoke to David Dietz over at PPAC Private Wealth Management, and he said that, back to the conversation that we had earlier about inflation moderating, when it does actually get past its peak, he doesn't know if we're actually going to go back to that pre-pandemic level of sub 2% that we saw before we entered the pandemic. That, we could be at a new normal now.
All right. Just want to quickly mention, if I can, CrowdStrike, it's up almost 9% in the after hours. That forecast is upbeat, so we're seeing investors move into it. All right, guys, we got to run. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, do want to just mention, and our thanks to our TV colleagues walking us through the market, a lot going on. We mentioned just CrowdStrike quickly at the end. Stock is up about 10% in the after hours. First quarter adjusted EPS, 22 to 24 cents. So the outlook is above that 17-cent Wall Street estimate. First quarter revenue, Tim, also looking like it's going to be a beat. So investors moving into it big time in the after hours.
2023 adjusted EPS, 103 to 113 estimates were for 90 cents. I would be interested to hear, Carol, from CrowdStrike, any commentary around companies actually buying more of this software after Russia's invasion of Ukraine, being concerned about increase in cyber attacks given the conflict?
Yeah, it's a really good question. Stock was down about 17% so far for the year heading into those earnings. So it is this commentary that we're looking for in terms of getting better visibility about this environment we're in and how long it sticks around.
One more headline crossing the Bloomberg. Crocs pausing its business operations and importation of goods in Russia, the Colorado-based company maker of footwear.
It continues and it continues. All right, let's get back to world and national news. On it is our Nancy Lyons. She's in our 991 newsroom in Washington, D.C. Hey, Nance.
Hey, Carol. Ukraine desperately wants help from the West, and especially those MiG-29 jets that Poland is offering to deliver to a U.S. airbase in Germany. A senior aide to President Volodymyr Zelensky urged a quick decision on that transfer.
We badly need jets. We badly need fighter jets in order to defend the sky of Ukraine.
Ihor Jakova is the deputy chief of staff to President Zelensky and spoke exclusively to Bloomberg. But the Pentagon's John Kirby says the U.S. is not so sure about the way that transfer would be perceived by the enemy.
The transfer of combat aircraft right now could be mistaken by Mr. Putin and the Russians as an escalatory step.
The Pentagon's John Kirby says the U.S. does not want to make matters worse for Ukraine. After years of multi-billion-dollar losses, a new glimmer of hope for the future of the U.S. Postal Service. Bloomberg's Amy Morris has more from Washington.
Congress has stepped in with the most significant overhaul since 2006, when the Postal Service was first required to start pre-funding future retiree health care costs 75 years in advance, hobbling the service and bleeding its budget dry and forcing it to default on that obligation. This bill removes that burden and shifts employees to Medicare. The changes are expected to save the Postal Service $50 billion over 10 years. In Washington, I'm Amy Morris, Bloomberg Radio.
A Maryland man has died 2 months after becoming the first human to have a pig heart transplanted into his body. The University of Maryland Medical Center says it is still unclear the cause of the man's death. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic.
That's me.
I was like, what's your name?
Yeah, well, it's okay.
I'm just
We've only been doing this together for a little over a year.
I'm a
so
little tired. I'm
I
feeling
know.
a little sugar
Well, look,
low.
you had a big day. We both had big days.
Yeah, we're
we
gonna hear an interview that you did at our big day.
Yeah, looking forward to that. We're going to hear from Rob Falzon over at Prudential Financial. First, though, let's talk a little bit about what the SEC is weighing right now. We talked cybersecurity just now when it comes to CrowdStrike reporting earnings after the bell. The stock is higher as a result. A story by Ben Bain catching our eye that companies would actually face more pressure to alert the public of hacks or other significant cybersecurity incidents under a new plan from the U.S. Securities and Exchange Commission.
Yeah, this is about disclosure. So the SEC today proposed requiring publicly traded firms to disclose breaches within 4 days. The demands would apply to incidents that are considered, quote, material or important to the average investor.
The plan, which was supported by the Commission's 3 Democrats, is the latest move by Wall Street's main regulator to prod companies to be more transparent when attacks occur after years of high-profile incidents. Last month, the SEC proposed requiring investment companies to bolster their own cybersecurity systems.
So SEC Chair Gary Gensler saying in a statement, cybersecurity incidents unfortunately happen a lot. A lot of issuers already provide cybersecurity disclosures to investors. I think companies and investors alike would benefit if this information were required in a consistent, comparable, and decision-useful manner. So does this mean as soon as it happens, does this mean every quarter we're also going to get an update at the end of the quarter? Like if we
I don't know what it means moving forward. I can tell you what companies do now.
Yeah.
They actually currently rely on 2018 SEC guidance to determine when to disclose incidents. That actually does not specify a time frame for notifying the public. I also think about when my own information is at risk. You know, how many times have you gotten a postal letter that says, you know, this company lost your data? And we need to warn you as a result.
Weeks after the fact?
Yeah, it's like sometimes a year after the fact.
No,
I've gotten it from employers in the past.
Have you really?
Yeah.
Well, you know, it's the world we're living in, right? And so you do think about the disclosure. What's the responsibility to investors, especially if it can have an impact on the company? And we've certainly seen stocks move as a result.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Among the companies reporting after the closing bell, CrowdStrike Holdings, a cybersecurity company, revenue forecast beating the average analyst estimate, shares up now by 13% after hours. Dip buyers powered the S&P 500 index up 2.6% today, with the S&P rallying 107 points. A ferocious rebound for U.S. equities today, with the Dow up 653, up by 2%. NASDAQ up 460, a gain there of 3.6%. Still, the rally managed to claw back only some of the losses that have been incurred since Russia invaded Ukraine. 10-year down 29.30 seconds. 10-year yield 1.94%, ahead of tomorrow's CPI report. Complete coverage, by the way, here on Bloomberg Radio. Gold lower today by 2.9%, $19.91 the ounce. This update brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. Cannot ignore the eye-popping move again in oil, this time, though, on the minus side. West Texas Intermediate crude down 10.8% today, 110.37 right now. Brent, the global benchmark, down 11.8%, 112.91 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, earlier today, I sat down with Rob Balzan, Vice Chair at Prudential Financial, from the Bloomberg Live Work Shifting Work 2.0 event. In this excerpt, Rob discusses the uncertainty caused by Russia's invasion of Ukraine, as well as the state of the American workforce.
But I do want to start with Russia's invasion of Ukraine.
Yeah.
And how you're looking at that. I mean, you were CFO at Prudential Financial before you were vice chair. You have been at the company since 1983, so you've seen shifts in the global power dynamic. How are you reading into this?
Yeah, so, first of all, obviously, it's a humanitarian crisis, and you have to sort of always start with that. As we think about it from our standpoint, we don't have a lot of direct exposure to Ukraine, Belarus, Russia. We're a global company, but we're not either materially invested or have operations in those areas. Having said that, what you see coming out of this is a lot of volatility in the marketplace. Outside of the humanitarian issue, it adds uncertainty into the economic outlook. And the Fed's going through a process of figuring out, how do we normalize interest rates in light of inflation environment, and trying to balance that with sort of the implications of the economy. This makes all of that much more difficult. And so, in the Pulse of the American Worker survey, one of the things that comes through there is this insecurity that individuals have around their own financial outlook. This only compounds that, right? So for every individual, you're sort of looking at before this, an uncertain sort of economic environment, and are you making enough progress against inflation and other needs? And now I think that picture gets murkier and adds even more anxiety to the individual American.
It's interesting that you mentioned that word insecurity. I did go back and watch the conversation that we had a year ago.
Yeah.
And I opened by asking you how the American worker is doing. And you used some words that hit me pretty hard recently. You said they felt, quote, insecure about having relevant skills in a rapidly changing environment. They felt vulnerable about the lack of financial stability to get through a pandemic. Here we are, a year later, lots of stimulus later.
Yeah.
Unemployment rate at that point was just under 6.5%. Now it's under 4%. How's the American worker doing right now?
Yeah, so it's interesting when we look at survey to survey over, as you said, we've been doing this in 2017, and you look at the trends over that period of time. The two things that I spend a lot of time looking at are around financial security. Obviously, we care a lot about that, both for our own employees and because, American workers are our customer at the end of the day, too. So we spend a lot of time thinking about that. And then skilling, because ultimately, financial security starts with having a good job with benefits. To have a good job with benefits requires that you have a skill base. And unfortunately, Tim, what we're finding is that we're not making much progress on either of those fronts. We're actually maybe even going backwards. So our most recent survey said 70%, so 42% of the surveyed indicated that they're actually in a better financial position today than they were a year ago. But 70% of them...
Which is pretty remarkable.
Yeah, it's a good number, right? Yeah. You sort of sound better off. But the problem is they're still insecure because we had this gap. And all they've done is they've made progress against the gap, but there's still a remaining gap. So 70% of them are insecure about their financial future in retirement. That's up 10 points from the beginning of the pandemic and 5 points from when we surveyed just a quarter or so ago.
So how do you square that with the Great Resignation?
Yeah.
And what we've seen coming from the American worker in terms of not just job switching, but leaving the workforce entirely?
Yeah, so it's sort of interesting. On the surface of it, it looks like these things don't sort of fit with each other. If people are insecure, why are they leaving? Well, part of the reason they're leaving, they're sort of, as we think about those motivators, compensation is in there. They are looking to leave in order to find sort of a better financial equation. That financial equation includes not just direct comp, but benefits as well. And so there is a motivation there that's sort of behind this Great Resignation. But Tim, the other pieces of that actually have to do with part of the topics that were in the earlier panel, which is it's really about a big motivator there is around this whole work-life balance. People are looking for greater flexibility than they're able to get, and they're also looking for career development. Those are the two things outside of compensation that come up repeatedly in our surveys. And if you look, in fact, so in our survey, 22% of the people we surveyed had recently changed jobs, right? 1/3 of them took a pay cut when they changed jobs. That blew me away when I saw that statistic.
They took a pay cut because ostensibly they wanted a job with a better quality of life, or what they interpreted as a better quality of life, more flexible.
Yeah, and so 30% of them actually took a part-time job or a gig job because they were trying to find that kind of a balance. But yeah, so the motivator seems to be that compensation is always a motivator. That becomes table stakes as leaders think about these things in their own workforce. But the reality is it's so much deeper than that, and this flexibility around balancing work and life has become a major motivation for individuals.
That was Prudential Financial Vice Chair Rob Falzon. My conversation, part of it with him from the Bloomberg Live Work Shifting 2.0 event. You can see more of that interview at BloombergLive.com. Carol, I shared a few anecdotes that didn't make that particular cut, but I was with a friend, with a group of friends who I hadn't seen in a while over the weekend, and one of them is an architect and said that at his firm and firms that he works with, young architects are saying, we want to work 4 days a week and get the same pay. And their bosses are like, well, I guess okay, because they don't have anyone else to go to. The labor market's so tight.
Because they need it.
They need it.
Or need them, I should say. Well, and this is what the whole event has been about, is just, people wanting flexibility. They care about their work environment. I caught up with Two Sigma Impact's Warren Valdmanis, and he said toxic work culture is a 10 times greater predictor of employee attrition than pay is.
Wow.
So when you're going to work, when you're going to work somewhere, you're thinking about the culture, the environment, and that can be more important than what you're compensated. Which is amazing.
Lots of really interesting conversations from that Bloomberg Live event today. Be sure to check it out at BloombergLive.com.
Yeah, how the office is changing, the use of technology. There's so much there, so be sure to check it out. All right, we've got an interesting guest, fun guest, coming up right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everybody. Carol Master along with Tim Stanovich live in our Interactive Brokers studio here on Bloomberg Business Week. We have been talking about all of the companies that are halting operations in Russia. We're going to talk with someone who understands branding, marketing, and advertising, well-known name in the space.
Yeah, we're talking Donnie Deutsch. He's got the On Brand with Donnie Deutsch podcast. He's the host of that. You also recognize him, of course, from cable in the past. We're going to be chatting with him in just a few minutes. In the meantime, a check of what's going on in the after hours. Here's Charlie Pellet.
Hi, thank you very much. Earnings after hours. Can I just say we get great guests on this show? We've got
You could say it. You
you
could
know,
say
we
it
really
again.
do. It just never ceases to amaze me, and also on TV too. Every day I come in, I'm like, we're talking to them. That's awesome. Here's what's going on. The Dow, the S&P, NASDAQ all rallying today big time, with the S&P up 107, up 2.6%. The Dow up 653, higher by 2%. NASDAQ up 460, up by 3.6%. 10-year down 28.30 seconds. 10-year yield 1.94%. Spot gold down 2.7%, 19.95 the ounce. Bitcoin surging today by 8.5%, 41,787. A ferocious rebound for the equity market. Oil heading in the other direction. Lots of big market stories today. West Texas Intermediate crude, though, plunging 11%. 110.29 a barrel, was back below 110 for a while. Brent, the global benchmark, down 11.9%. 112.79 for a barrel of Brent. Well, as for the market backdrop and what was behind today's move higher, David Dietz is senior portfolio strategist at PPAC Private Wealth Management. He was our guest right here on Bloomberg Business Week.
If there's some resolution to Russia and Ukraine, perhaps that takes some of the steam out of the energy market, takes some of the steam out of the other commodities, including wheat, copper, nickel, and so forth, and that would give us some hope that inflation there may be a little light at the end of the tunnel, and that could keep the Federal Reserve a little less hawkish.
And among the companies out with earnings after the bell, CrowdStrike, its shares up by about 13%. Several hotel giants have ongoing reservations about Russia, while not completely checking out. Hilton Worldwide Holdings and Hyatt Hotels Corp say they will suspend the development of new hotels in Russia, joining a corporate backlash against the invasion of Ukraine. I'm Charlie Pellet. That Bring on the Guest is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So I'm thinking, Tim, about our earlier conversations at the Bloomberg Live Work Shifting event. We talk about what workers expect and are increasingly demanding in this tight labor market, what they want from employers. Greater pay, yep. Flexibility, sense of purpose, respect, a path to growth, and companies that have a clear mission that they can align themselves with. So our next guest has spent decades having conversations with companies and some of the best-known brands. He created a multi-billion-dollar advertising and marketing and branding agency along the way. We are delighted to have with us Donnie Deutsch, former CEO and chairman of Deutsch Inc. Today, he is host of the On Brand podcast, and he joins us via Zoom in New York City. Donnie, good to have you here with us. How are you?
Great to be here, Carol. Great to be here. Thanks for having me. Really appreciate it.
Well, a lot to talk about. We want to get to your podcast, but we also want to ask you about having spent years talking to companies about their products, services, their branding. How did that conversation evolve? How has it continued to evolve to today?
Are you talking about as far as corporate conscience?
Yeah, well, corporate conscience and just how they think about it, right? They've got to think about so many things when they put something out there.
Yeah, I'll work back from corporate conscience. Today this is price of entry, particularly for young people. Companies used to want to be agnostic because obviously you don't want to alienate one consumer, and then all of a sudden consumers, and particularly 18 to 49, which is where the sweet spot is for most marketers, are demanding what companies have to say about voting rights, about racial equality. You're going to see companies, it's going to be interesting in Florida now with the Don't Say Gay thing. Disney has come out against it. And you're seeing, as you guys talked about earlier, all of the companies pulling out of or stopping doing business with Russia. This is what young people care about. Not only the product, but the conscience and the way the company looks at the world. So very often right now, it's good business to have a good moral center.
Do investors care about it? You know all the stuff that's been put out there, Donnie, about multiple stakeholders. Business Roundtable did it a few years ago. We hear it incessantly, but I do wonder when it comes down to it, what's more important, bottom line, or that you are saying and doing the right things? What's the connection?
Well, to an investor, you're looking for bottom line, but obviously every investor has their own, decisions to make in terms of the types of companies they do business with. But it really comes down to, I'm going to go back again, is if you have a company that is tone deaf and you have a company that won't stand up and say, we believe in voting rights or we believe in racial equality or certain things that are just basic pillars of our democracy and fair play, those businesses are not going to do well. So, as you're looking at a company's balance sheet, also it's not going to be on the balance sheet, but try and look at what they stand for and how they stand for it. And I think that's going to be critical.
Donnie, what are some companies that are doing a really good job of this right now? Who comes to mind for you?
I'm going to use Disney right now as an example. I mean, this is an issue that is, there are two sides. There are two sides to it as far as people having passionate feelings about it that don't say gay was basically not bringing up in school any issues of gender, any issues of LGBTQ. The other side of the argument is, well, it only goes up to third grade, and do we want this being discussed with such young children and putting these issues on the table for them in any degree? So you're going to have arguments on both sides, but Disney, which is a very progressive company, has a very big gay population within it as an employee base, took a stand and came out and said something, they were asked about it. So you can't hide anymore. But I think that the companies, obviously any company that is giving percentages of their businesses away to certain charities, philanthropic. So it's not just issues, it's also being philanthropic.
What about when it comes to politics and how companies get involved increasingly in politics in this day and age? We saw a little bit of a pause after January 6th and, the riots at the Capitol in the insurrection, but it's kind of come back that companies are playing in politics again.
Yeah, they have. But by the way, a company's gonna be asked, what do you think of the Black Lives Matters movement? They can't hide. They can't hide it. It used to be, well, we have no comment, and a no comment can backfire on you. So they still, most companies, if they had their way, they would not be venturing into politics or venturing into, certainly companies don't, for the most part, want to get behind a political candidate. Although you did see exceptions with companies, I don't say coming out against Trump, but very vocal choruses within the companies. But, particularly you're a big company, you sell a mass audience. There's a word there's a reason they call it mass. It's mass. And the way it works, why companies are so sensitive to issues is, here's what happens. Let's say a company runs an ad and it's offending somebody because of the way it represented a person or something like that. And somebody writes a letter to the CEO and says, Dear Mr. CEO, I've been buying your product for 27 years, as has my family. I'm no longer going to buy your product. They send that note down to the chief marketing officer with a letter that, this is just one consumer. This is, please take care of.
Yeah.
Because no CEO wants to see even one person. And you can always buy media in different places. And the CMO sees a note from the CEO that says, please take care of it. And that means, do something about this. Let's get off this network, or let's get off this product. And so there's a lot of times I don't want to call it consumer terrorism, but there's a lot of fight in consumers' pencils.
Donnie, sit tight. We're going to come back and continue the conversation. Donnie Deutsch is with us. He's host of On Brand with Donnie Deutsch. We'll continue in just a moment.
Let's get a check the latest world and national news. To Washington, D.C. we go. Hey there, Nancy Lyons.
Hey, Tim. Ukraine is not willing to cede a single inch of land to Russia, but it is willing to discuss some other issues, including neutrality. That's what the Deputy Chief of Staff to Ukraine President Volodymyr Zelensky told Bloomberg today.
This is the case if the world community will provide us with security guarantees, together with Russia, who should also guarantee security and not repeating the situation, the aggressive war which is happening now. Yes, this question is discussable.
Ihor Jakova, speaking exclusively with Bloomberg, says Ukraine desperately needs help defending the skies. And he urges a quick resolution of what to do with those MiG-29 jets that have been donated by Poland. The Pentagon's John Kirby this afternoon said the U.S. thinks a transfer of those jets is a bad idea.
We need to be careful about every decision we make, that we aren't making the potential for escalation worse.
The Pentagon's John Kirby. A former Michigan Boy Scout leader is facing criminal charges in connection with an investigation into the Boy Scouts of America. Michigan Attorney General Dana Nessel says Mark Chapman is facing 10 total charges for allegedly sexually abusing 2 victims when they were children.
Mark Chapman is alleged to have abused children for years. He threatened them with violence when they refused to participate or tried to stop him from continuing his assaults.
Nessel says the charges against Chapman include 2 counts of criminal sexual misconduct in the first degree, 2 counts of criminal sexual misconduct in the second degree. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. We're going to get back to Donnie Deutsch in just a moment, but just crossing the Bloomberg terminal, definitely catching our attention. Amazon to do a stock split 20-for-1 and buy back up to 10
20-for-1,
billion shares. Well, let's pull up the numbers and let's pull it up.
$10 billion worth of shares.
First of all, it's a $2,785 stock. So think about what you do by doing this 20. So divide it by 20, right?
Yes, do the math.
And you reduce certainly the share price. Stock's down about 16.5% just here in 2022 alone. So that buyback really will give it an opportunity to buy back a lot of shares because the stock has gone down a lot. And you think about what that does in terms of the outstanding.
It also did nothing in 2021, a year that you saw the S&P 500, climb by 27%. Amazon was up only 2.4% that year, Carol. So the stock has done nothing really since the summer.
And no surprise, we're seeing shares of Amazon up about 8.6% in the after hours. So again, when you think about earnings per share, like that automatically, that picture is going to change because of this. Actually, you're getting, because of the stock split.
Yeah.
So we're getting actually more shares out there.
You're getting...
No, we're reducing it.
Well...
Did I just say it wrong? Yeah, I did.
Well, part of it, too,
you're
is
getting
stock,
20 for every one that you've got.
But then stock buyback at the same time.
Right,
So then they're reducing the number of shares.
So that's what's interesting.
Yeah.
That's why I was kind of thrown a little bit. So you're increasing and then reducing.
Yeah.
So it's interesting what they're doing. But it's going to reduce what the cost is, right?
Yeah. There are some... I've had this debate recently. I think it was because of Tesla. But in this day and age, you're able to buy fractional parts
Ownership.
of shares. Yeah. So, a retail investor can, log into their Robinhood account or their Schwab account and actually buy a tenth of
So it doesn't
Amazon.
matter as
So
much.
It doesn't matter as much in this day and age. It does for other types of trading if you're not just buying and selling stocks, options and stuff. But
Yeah.
Yeah.
But the stock is definitely up, and it must be on that buyback news because we tend to see that when you see a company come out, and that's what they've been doing with a lot of their excess cash on their balance sheet. We've certainly seen it, and they've got a fair amount of cash on their balance sheet. All right, again, Amazon stock split 20-for-1 and buying back up to 10 billion worth of shares.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Big after-the-bell news out of Amazon as it delivers a 20-for-1 stock split. Amazon buying back up to $10 billion of its stock. Amazon shares surging after hours, up now by 12.8%. So again, repeating the headline, Amazon reporting a 20-for-1 stock split, also buying back up to 10 billion of shares after hours. Amazon rallying by 12.8%. That's a proposed stock split, by the way, subject to holder approval of the company's annual meeting set for May 25th. Big move higher today for the Dow, the S&P, and the Nasdaq Composite Index. We had the S&P 500 index surging the most since 2020. S&P up 107 to the gain of 2.6%. The Dow up 653, up by 2%. Nasdaq up 460, up by 3.6%. 10-year yield 1.94%. Spot gold down 2.9%, $19.90 the ounce. West Texas Intermediate crude plunged today after several days of big moves to the upside today. WTI dropping 11% to $110.05 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. I want to get right back to Donnie Deutsch. He's the host of On Brand with Donnie Deutsch, the podcast. Donnie, great to have you back with us. On your podcast, you go everywhere. Your guests have included Michael J. Fox, Steve Madden, former Governor Chris Christie. You do politics, Michael Cohen. One thing that I was thinking about when, in our planning call today is the public opinion polls of President Joe Biden, which are not looking great right now. According to Real Clear Politics, 42.3% when it comes to job approval rating. So not the lowest in his presidency, but just off of the lowest. And it made me think of an article that our editor-in-chief emeritus, Matthew Winkler, wrote back for Bloomberg Opinion in December. And he took different metrics about how the economy has been doing: GDP, profit growth, S&P 500 performance, non-farm payrolls, consumer credit, and more. And he came to the conclusion that America's economy improved more in Joe Biden's first 12 months than any president during the past 50 years, notwithstanding the contrary media narrative contributing to dour public opinion. From a branding perspective, I wanted to get your take on this, because the unemployment rate's sub 4% right now. The American consumer is doing pretty well. Yes, inflation is really hot right now, but why are the president's job approval ratings so low?
It's a great question, and it's a lot what we talk on. I'm on Morning Joe all the time on MSNBC. It's a lot what we talk about there. I talk about podcast. It's basically messaging. It's I can give an argument. I can sit here. You just rattled off that the economy. It obviously say the last couple of weeks with Ukraine and obviously the little fear with inflation. But as far as the first year, roaring. I think it's a couple of things. I think Joe Biden himself does not come across as firmly in control. Joe Biden is a good man, and I support him for president, but there's something in his delivery that he doesn't feel strong. And I think that translates. It's hard to see that in polls, but I think it's partially his age shows, and I don't mean to make an ageist comment, saying when he comes across, he doesn't. Now, he's look very firm and very in control with what's going on in Ukraine. But up until this point, particularly with Afghanistan, that really, really hurt him. And also the Democrats, there's a lot of them, the far progressive, there's a lot of woke issues that are constantly discussed. And I think that comes up and hurts him because most of the country is not living in a super woke universe, if you will. And so I think all of those things contribute to it. But I think most of it is the messenger himself. I don't think he has come across as inspirational. And I think there's the substance and there's the sizzle, and the sizzle has not been there.
All right, so now it makes me wonder, go back to the Kennedy-Nixon debate, take media out of the picture.
Mm-hmm.
How much that, for better or worse, we're in media, we're all in social, linear, you name it, in all its different forms. But if you take media out of the picture, how might that impact political messaging and how we view political candidates?
We'd have to go back to another universe, and it's hard, even.
Well, I know we can, but what do you think about how much that is skewing? We talk about it, right? Messaging, how much it can be skewed for better or worse, for wrong or right?
It's everything. But the difference now is that the media used to be newspapers and the 6 o'clock. People literally would get their news. They get it from the morning newspaper and their 6 o'clock evening news, and that was it. And the big problem now in media is not the media itself, is that everybody gets bespoke media and there's no accountability on social media. And whereas half the people in the world get their news from Facebook now. In Facebook, if I wanted to run an ad for bleach detergent, I would have to go through more stringent regulations to get it on ABC or to get it on Bloomberg than I would have to get it to put it on Facebook or so many other places. So the problem is not the proliferation of news itself. The problem is the proliferation of inaccurate news and false news and inaccountability in the social media spaces, and we have not figured that out yet.
So, Donnie, okay, we haven't figured it out. Do we need to rethink that and regulate them more? Or, I
think you need to look at their algorithm. This is something that's discussed a lot because it's a slippery slope. Who gets to play judge and jury and whatnot. But on the other hand, how do you have Facebook, for instance, which we know is putting out so many falsehoods about the pandemic and other things and whatnot. And also, I know this is not very popular, but Fox News does things that are not always accountable and stand behind. I don't mean to sound like a liberal lefty, but it's very skewed. And of course, I'm sure MS does some things on the other side. The problem is the slippery slope thing, particularly on when you talk about the internet. And the answer is algorithms, because the algorithms are set up that the more passionate and crazy the response, the more engagement and whatnot, which leads to very polarized messages on both sides. So basically we need to look at the algorithms of these big social media giants and make sure that there's something in there that's not guaranteed, okay, we are trying to put on there stuff that is going to be very, very controversial, because controversial breeds engagement. Engagement means eyeballs. Eyeballs means money.
To be fair, and Facebook has come out and talked about developing a strategy that they've had in years to monitor and remove content that violates its policies. They're working on it. We know it's not perfect, but just to be fair.
And Donnie, I got to ask, because this is one thing that Democrats and Republicans really seem to agree on, and they don't agree on the methods, but they want to quote unquote rein in social media, rein in the tech companies. And I'm wondering if you think that there needs to be stricter regulatory environment for social media.
Something needs to be done. This is you can't have half the world getting news from an outlet, and I'm not just picking out Facebook, but they seem to be the one where most people get their news, where there is just not accountability for fact. You can't. It doesn't. Once we lose truth is one of the pillars of democracy, and we need truth. We need facts, and right now people get media bespoke, and people get the media the way they want it. And if they're not hearing what they want, they'll find another place to get it. So we've over-democratized media, democratization of things, and we put too much power in the hands of the smartphone. I always say is in certain ways the devil. I mean, there's something about when there's too much democratization of something like the truth, and that becomes problematic.
Yeah, it's kind of ironic, right? This democratization,
and
what it's
really
led
ironic.
to. Donnie, fun to spend some time with you. Thank you so much. We really appreciate it. Donnie Deutsch, he's former CEO and chairman of Deutsch Inc., and of course, host of the On Brand podcast, joining us via Zoom in New York City.
Well, let's get to an understanding of what we have coming up on Sound On. Joe Matthews got a big show, a big program this afternoon. Joe, what do you have planned?
Well, we're asking 3 big questions today. Can we figure out a way to give fighter jets to Ukraine? Can Congress figure out a way to pass a budget before the government runs out of money Friday night? And is it as easy, and you guys were touching on this, for domestic drillers to crank it up and make up for banned Russian oil as the president says it is? It's much more complicated than some are making it out to be.
And I think my to-do list is troublesome. I mean, man, Joe, looking forward to it. Joe Matthew, of course, host of Sound On, that's coming your way in just about 4 minutes' time. All right.
We did it.
A week from now, we will have finished that Fed meeting, too.
What are they thinking right now?
I don't know. So much for them to
Look at that
tackle.
inflation tomorrow, too.
Yeah, exactly. That CPI print. All right, for Tim Stanovic and the whole BW team, have a great evening. I'm Carol Masser. This is Bloomberg.